Hello and welcome to the deVere live webinar series. My name is William Trayford and this is our 26th live webinar. And this webinar is very, very different because today we want you to get involved. So before I go on to explain exactly how that's going to work, I'm going to bring on our three other panelists. So Phil, Howard, and Seb, if you want to turn on your mics and turn on your cameras, here they are. So I'll introduce our other three panelists in a moment, but let me just explain the format for today. So the title of today's webinar, Ask Me Anything. And each one of our experts is saying, ask me anything. Any question that you have, you are able to ask live today. So we don't just want written questions coming in on the chat or something like that. We want you to actually get on mic. We want you to ask us directly. So we're put on the spot and we don't know what's coming. So how is that going to work? What you should be able to use and you should know about is a raise your hand feature. Okay, so depending on the device that you're using, it might be at the bottom, it might be at the top. There might be 3 dots on there that you need to click, and then that gives you the option to raise your hand. But what I will be doing is I'll be looking out for people that raise your hand, and I will then allow you to speak. And I think on Zoom it will say the host has invited you to turn on your mic. And don't worry, it's only a mic. It's not your video, so you're only speaking. Don't have to worry about what you look like. So you'll be invited to turn on your mic, and then you can ask your question. And then I will then point that to whoever I think would be best to answer it, or we might have a few people answer the question. And that's how we'll go. If you can't find the raise your hand feature, don't worry. Find the chat box and just put it into the chat. I'd like to ask a question. As simple as that. All right. Any issues, just try and find the chat box or raise your hand and we'll get you involved at some point during the webinar. So all 4 of us are financial advisors. All 4 of us are experts in the field, but we also have our specialities. So let me introduce who we have today. So we have Howard Whiteson, the founder of Wealth Without Borders. And today he is our international wealth expert. We have Phil Morris, area manager at the deVere Group. He is our expert on pensions. We have Sebastian Restrepo, wealth manager at deVere Group, and he is our SME specialist and also digital asset specialist. So they are our experts, and tonight is Ask Me Anything. So I hope you're all aware of how to use the raise your hand function or using the chat box. But what I'll do just to get us started is we have had some questions from people who weren't able to attend tonight, and we're going to start off with one of those. And as advisors in China, you will not be surprised that the first question to come in from Visaya is, are there other ways to transfer Chinese RMB out of the country into an overseas account other than from the bank? Surprise, surprise at that question. Phil, let's ask you first.
Well, firstly, good evening, everyone, and great that you could hopefully join us live. Tricky question. Thanks very much, Will, for fielding that one to me. Of course, there is only one answer to that, and that is the official answer, and that is to do exactly as I think it was Visaya who asked that question has indicated, which is via the regulated banks. There are other ways that people find a way of doing it. They aren't deemed to be, with the consensus of potentially the Chinese government. So I honestly don't know whether to expand on this. I mean, there are people I know that move renminbi out via currency swaps and use potentially cryptocurrency as a route to exchange that money in the other country. There are, I believe, shadow banking facilities in China which are undergoing severe clampdown by the authorities, and culprits are being rooted out and fined very heavily at the moment. And so I wouldn't advocate any other method via official banks, but I understand there are other methods. I don't know whether any of the other panelists want to add to that.
Well, here's the thing. If you've paid your tax on your renminbi, you can convert it, send it out the country. Yes, it's painful. You have to sit in the bank for 3 hours, possibly. I always recommend you take with you someone who can speak very good Chinese national. Tell the bank ahead of time you're going in. And as long as you've paid your tax to China, there is no issue. So I'm always rather bemused by this question because it does suggest that tax isn't being paid on renminbi, in which case, pay your taxes. I think, yes, it's painful to go into a bank, but the good side of a Chinese bank is that the exchange rate usually is very favorable. So provided you're prepared to sit in the bank for some time, I would possibly, look to build up an amount and send it in one go. You don't want to be going in every week, but I always think just the same as any other country, doing things the way you're supposed to do them and legally is by far the safest way. I too have heard of all kinds of ways people manage to do that, but that my advice would be to suck it up, go in the bank, take a good novel and get your money transferred. What about you, Seb? You've probably faced that question a lot.
Well, good evening, everybody, first of all. Yeah, I face that a lot. That is a very common question among most of my clients. On the digital aspect, I can say, yeah, some digital assets are used to send money across borders. The problem is not so much about sending digital assets. The problem is the conversion between the fiat currency to the digital asset. That's kind of the hard part to do. But since I handle most of my clients, or a lot parts of them are SME owners, they have some sort of goes around that, which usually involves setting a company in Hong Kong, where they can just basically receive whatever money, and the Hong Kong company employs them and they receive most of their money or salaries in Hong Kong. So that way they don't have to kind of be paid in China. But a lot of regulation are being changed in China as well. Last year, China introduced a new law in terms of taxes, which is kind of being affecting a lot. So my recommendation to all of those clients has been just be more efficient in the payment of taxes. Pay taxes is something that you need to do, is inevitable, but you need to be more efficient, that's for sure. And that's something that I help them do. And that's something that anybody here can help them do as well in the panel, is to become a little bit more efficient in taxes. But of course, you cannot just not pay taxes. That's basically what I tell them.
Yeah, great. Some great answers there. And well-rounded from all different points of view. Brilliant. I'm going to stay with you, Seb, because it's on opening a business. So what would it take to open a small business in China, like a coffee shop, small restaurant, things like startup costs, running costs, etc. And how much should I allocate from my whole portfolio?
All right. So the most misconception part of the Chinese kind of SME owners is that before, when you wanted to set up a company in China, you have to have we call a joint venture. Basically, you have to have a Chinese partner and you're the other partner to have a company. But the Chinese have been a little bit more flexible in terms of that. The trade war has impacted them heavily. So they're openly more to people who want to have companies in China to be 100% what it calls that WFOE or a WFOE normally call, which is a whole foreign-owned company. So in that being said, the prices, the registration, the regulation, it will depend on the city. As you know, China is a very complex place, and each city kind of has their own kind of regulations. So it depends. It really depends. You can find a lot of companies that will do on a very cost efficient. It will not cost you much depending on the district. For example, if you open a company in Pudong, is more expensive than opening in Baoshan district, and so on. And the regulation of employment is a little bit different, but in overall, it's not very hard to set up a company in China. It's very straightforward. You just need your passport documents, pay a fee, and get the license for whatever you want to do. Of course, there is a list that the Chinese government will not allow you to enter into that industry. For example, mining, oil, banking is a very heavy regulated things. But apart from that, it's been a lot of improvement. Before in that list, there was like 80 activities you cannot do. And now, if I'm correct, there's around 28, 30. So it has improved a lot. So I think in the future, China is opening for more companies to come. The trade war with US definitely affect them. And that's something that they're trying to change as well.
Excellent. Very excellent detailed advice. Really appreciate that, Seb. So we're going to go back to talking about the R&B. I'm just trying to line up a couple of people to be brave enough to come on mic. So if you do want to come on mic, do check your chat box. I'm going to ask you first, so you're not completely surprised. So do check your chat box and see if I've said, do you want to speak next? And just say yes, and I'll make sure you're lined up next. Okay, because a few of you have sent in some questions, but I'd like you to ask them on mic. So from Vasaya, when do you reckon RMB will be an acceptable currency for policyholders to pay with? This is more of an international question. So I'm interested in acquiring an offshore account through deVere in the near future. So this is where my personal interest is leaning towards. So an international, holding RMB internationally outside of China. Who would like to take that? Phil, do you want to take that one?
Maybe I'm not the best person to do that. I know that China's, tried to make noises to the effect that it will be opening up, and London, I think, was successful, 3 or 4 years ago in creating or being allowed to operate the first offshore RMB currency or FX offshore center. But it seems to have gone a little bit quiet on that. I really don't have anything to add from a point of view of authority on this question. I think Seb knows potentially more about the way things are going, because China is talking about a digital RMB, and I do not know whether that's going to mean, more international acceptance for the currency. What do you say, Seb?
Well, to be fair, it's very new. They just roll out that this year, so we don't really know what's gonna happen. If the intention of the Chinese government is to allow cross-border transactions with the digital yuan, my guess will be no. My guess will be there's gonna be a blend. There's gonna be like inshore renminbi and offshore renminbi, but both of them are gonna be heavily controlled by the Chinese government. So basically, if you wanna buy offshore renminbis, then it's pretty much the same as the problem that everybody faces now, sending renminbis out. But I think if they do allow that, it will allow is for companies or investors from all over the world can invest directly into the renminbi, and maybe they can buy company share directly in China. That is just I'm guessing, because it's really hard to know what the Chinese government will do with that. But I think if they want to have a more global presence, they need to have a global currency. That is for sure.
Yeah, that makes sense for sure. Now, it'll be interesting to see how that develops over the next few years. It seems that now they're making the moves. So Howard, I'm going to direct this question at you. It's from Mariam. Why should someone get a financial advisor instead of DIY? I read the book, The Common Sense Book of Investing by Jack Bogle, the founder of Vanguard. He mentions that active funds aren't really that good compared to index funds. What's your thoughts on active v passive investing?
Okay, so there are 3 questions there. First of all, you can do it yourself, and there's lots of good advice. It is quite a complex area, because whilst investing is partly mathematical, it's also partly psychological. And one of the big roles that a good advisor plays is helping you to navigate difficult times. For example, when we saw markets fall 35% in a month at the beginning of this year, our intuitive feeling when we see red is sell, get rid of it, oh my God. And often that's the time not only to hold, but in fact to buy. So an advisor can help with behavioral matters. And then on a broader level, an advisor worth their salt should be able to help with more structural and strategic ideas. So it's not just simply a question of what fund do I buy. If you think of an equivalent, perhaps, that's like walking into a gym and saying, should I use weights or should I use a rubber band? Because I've heard that rubber bands are more focused when you're lifting than a weight. Well, yes, that may be true, but an expert gym trainer will be able to know your precise physiology and what is most suited to you at a particular time. And one of the classic examples, I would say, of either or thinking that an advisor can help you with is either active or passive. And there's all kinds of debates online about which is better. Obviously, Vanguard has something of a vested interest in claiming passive funds are better. In fact, I think there's an argument for both types of fund in different types of situations. So a good advisor will help with behavioral stuff. They'll help you structure properly. They'll help you choose the funds that are most suited to you. And then I think there's a deeper layer, which is that where none of us really, or very few of us, are very literate around money. And I myself came from a place of financial chaos because of that. And I meet the most sophisticated people in Shanghai who are CFOs, senior partners at the big five, who are financially imbalanced. So I don't know about you, but when I was growing up, I had an economist for a father, so I was lucky. But most of my friends were told, you know, save cash, buy a few stocks, buy property, and that ain't great. So I would say, you know, you should look around, see if you can find an advisor who you can relate to, who you feel that would benefit you, because you'll be paying them a fee. Is the fee worth paying? And the advisor should be able to justify that fee to you. And if they can't, walk away. And the other thing, just very quickly, is you don't have to, again, be either or. You could take a part of your portfolio, do it yourself. You could take a part of your portfolio and have an advisor do it. Our economists would say wait 10 years. Perhaps you don't have to wait that long, but you could certainly wait a year or two and see which one's performing better. So I hope that's helpful to you.
Yeah, that's a really good answer, and it's a lot of important messages there actually. And I think Seb, you want to add a few bits to that?
I would add to that it's also about time. It's very time consuming to do all the research that we need to do in order to actually advise any fund. I mean, consider this: we live in this world 24/7. We wake up with news, we go to bed with news, we see clients, and we talk about this topic 24/7. And if you are a person who has a family, who has kids, who has a job, there is honestly not going to be enough time to do that type of research that you need to do to be successful doing investment by yourself. So what I tell a lot of my clients is basically you're hiring a financial advisor to give you time, to give you the time and the correct advice and do the research for you. And that's basically what I think is more valuable as well.
Yeah, excellent. Okay. What I'm going to do now is, Sarah, I hope you are ready. I'm going to allow you to talk. So I hope you are there with your mic ready to turn on, because you had an excellent question. I'd like to give you a chance. Hi, Sarah.
Hello. Can you hear me?
Yes, we can hear you loud and clear. Yeah, ask away.
Okay. I was just wondering, so I'm just starting out, I'm about a year into saving at the moment, and I'm late 30s. What are the best investments at the moment to make, sorry, that's my dog. What are the best investments to make at the moment to secure a financially free future?
Excellent. Phil, do you want to take that one on?
this begs a much wider question, and obviously I haven't got the privilege of understanding you and exactly your position right now. But I think what you're asking, and where I can perhaps try and sort of answer as succinctly as possible, is the areas perhaps that you'd want to be exposed to get as much growth on your money right now. So for sure, tech used to be considered sort of add-on and a peripheral, somewhat higher risk area to invest in. But I think that we've all got to accept now that they are, front and center, and that we are all very much dependent on the products and services provided by the large tech companies, and vis-a-vis or rather the smaller tech companies that will be the next big ones. So we need to have exposure in that area. We've also need to consider perhaps now the periphery, smaller percentage investments where we're looking for growth in the future could be, for instance, AI, cloud computing, EV, the electric vehicle revolution that has been somewhat quietened over the past few years with the reduction in oil price. But having said that, this year's brought sustainability into the forefront, and that's also an area where you should consider having some exposure. So these are the things that I'm recommending to my client base if it fits with their risk profile, and if the amount of money, for instance, is in line with their risk ability, if you like. So I don't expect these areas to go down. I think they're only going to go up. However, do we put the whole house on it in effect? No, we make steady, sort of sensible, proportioned investments in those areas. I hope that somewhat answers your question, Sarah.
Yeah, that's great. Thank you.
Anyone else like to add to that?
I think it's a seemingly simple question, but it's got quite potentially complex answers. A simple answer would be, think of a pie divided in thirds and have a third in stock, a third in property, a third in bonds or some alternative type of funds. I'm, as you can see, a bit more of an old fogey. So, I'm not, sadly, in my 30s. From an economic point of view, you can take massive risks with your money, Sarah, but, are you an aggressive investor?
Yeah, I would say at the moment I'm saving a very large chunk of my earnings. So I am quite a high risk investor at the moment.
Right, then forget the old fogey advice, then go with the Phil playbook. And, because equities are definitely the way to make money, and you can survive several coronaviruses. Sadly, I don't think this is going to be the last pandemic. I know we're still trying to cope with this one, but I would say you can still have a broader basket of equities, and indeed, somebody mentioned passive funds. You can buy the NASDAQ, for example, as a passive fund and hold it. So there's different ways of being aggressive with different hues of aggression. And it's quite a complex question. We've got, and I don't want to say, aren't we great, but we've got some structured products that very few people know about, or if they do know about them, they just generally think they're pants. But actually, it's one of the best things we do, in my view. And some of those during Corona times, at its height, were paying 20% returns from Goldman and different people. So there are a broad array of aggressive structures. So I hope that's helpful.
Thank you. That's really helpful.
Great. Thank you so much, Sarah. Great question.
Thank you.
Oh, sorry, I cut her off. How rude of me. Okay, I'm going to now ask John. If you're there, John, I hope you are. Hello, John, are you there? Should I put him? I'll still unmute. Here we go.
Hey guys, can you hear me?
Yeah, I can hear you loud and clear, John.
Yeah, no, just kind of linked to the question on, moving money out of the country in terms of the exchange rates, and just how do you guys see the RMB versus euro and dollar in the coming, I don't know, let's say 1-2 years? What's your thoughts? And maybe linked to that, maybe the pound as well, given your expertise and given the, I guess, the potential for, unstability in terms of the pound with the British exit, and whether that may also be an opportunity.
Well, we better start with a Brit then. Which one of you wants to take it?
Well, I know John, so I'll start with. Hello, John. How are you, mate?
Good.
So there's a couple of points to the question of currency. First of all, there are potentially always going to be currency plays available, but currency is notoriously difficult to predict in terms of its movement. Do you have any idea where you may hang up your work clogs and, sit by the fire and tell stories about your time in China?
No, but I am, I guess, specifically thinking about having money in euros and dollars to be able to then invest that outside of China.
Yeah. So, there's the idea that one could wait on the grounds that the US dollar might get further devalued, because with every crisis over history, that's what does in fact happen. The USD does get devalued. However, I was chatting to Will this morning, and probably, I don't want to speak for Will, but we probably feel that it's not really in China's interest to allow renminbi to get too strong because of the broader economic questions. So that's one consideration, is how currencies perform against each other and whether one should wait to convert. The other question is, having converted, what does one then do to grow the money? So for me, if you're ultimately looking to go into USD and euros, it makes more sense to do it sooner rather than later, because what you potentially lose in terms of conversion, you gain in terms of investment growth over that period. Because, you're going to sit on cash in renminbi for the next 2 years, hoping for some major crash in Europe and America. Supposing it goes the other way and there's a major crash in China, I don't see that happening. But I don't know that I have a crystal ball when it comes to currency. Currency stays very stable often for a long time, and then it can move extremely quickly. So I would look personally to put aside the currency exchange question altogether, look beyond China to Europe and America and go into euros and USD. And then it doesn't matter. That's my view, but others on the panel may disagree.
Yeah, I'd like to add to that actually, because I think you're exactly right about the currency markets being very, very difficult to predict, and probably one of the markets where people lose the most amount of money getting it wrong, trying to be too clever. And actually, I think the best thing you can do with currency is actually try to remove the risk and not try to hold currencies that are not going to be relevant for you. So if you got a mortgage to pay in the UK, well, hold on to pounds. Don't suddenly have a big shock where you've got bills, you've got liabilities in a different currency, but you're holding the wrong currency to pay those bills because suddenly one of the movement doesn't go in your way. You know, conversely, a lot of people, for people that we deal with who are holding assets in the UK but retired outside of the UK, are actually now in a situation where their income dropped 20% because the UK voted to leave the EU. So what they knew pounds, they understood pounds, but reality pounds wasn't relevant to their lives they were trying to live. So really reducing the risk on currency, I think, is the most important thing for us to do, because trying to predict which way it's going to go, it's just an impossible task, I think. I don't know if anyone wants to add anything.
Well, just
Yeah,
quickly, sorry, go on.
Go on, Phil, go on.
All right, I'm going just to answer John's question, really. I mean, I think Chinese government has extra levers that other governments don't have. And my prediction, if you want an opinion, is that the renminbi will remain at current levels. It was discounted or devalued past month or so, with a view to boosting exports. And I see that continuing. And I think that it is obviously heavily related to the Trump trade wars. So it remains to be seen how that now pans out, given that he's been forced to step aside. So, but I do think, globally, companies have tried to reduce their reliance on China as a manufacturing base. We're still very much dependent on them with the consumer goods and services that we use. And China wants its factories very, very busy and working at full power. And to do that, it sees that, keeping the renminbi relatively low enables that global trade to be competitive. And just one other last opinion, I know that you specifically asked regarding the pound. I guess it's a question on whether you think good old UK will not go into a deep dark recession as of February, when we completely step out of EU trading conditions. If you believe that good old Britain will survive and will have trading deals with the countries that we need, and the Germans and the French need us as much as we need them, and it will, the deals will be done and the UK will not go down the tubes. I do believe that the pound is on a somewhat of a discount right now, so that might be a short-term opportunity between now and Christmas. But usual disclaimers apply, right? That this is my opinion and it's not investment advice as such.
Thank you all.
Great. John, can I ask, what's your opinion?
On the British exit and a deal, I think that's very tough, but clearly they cannot afford not to have a deal. I guess it's just what kind of deal.
Yeah, definitely. And where do you see the RMB? Do you see a strengthening RMB or weakening or stable, I guess?
Don't know. I clearly the Chinese government don't want any big changes, right? So it's within a constrained window what that might look like. I think that's kind of what I was asking.
Yeah, I mean, the other element, John, is as we've witnessed this year, are black swan events. I don't know if you're familiar with that terminology, but currency is affected by so many different factors, and I just think I would really concur with what Will said. So get yourself into USD and GBP and then don't look back. You could always, with hindsight, say, oh, I wish I'd waited 6 months. With hindsight, you could say, oh, I'm so glad I did that. FX trading is a place to get truly burnt, as well as truly make lots of money. So the other aspect would be to convert in tranches over a period of time, rather than doing it all in one go, if you felt there was significant advantage in waiting.
Okay, excellent. Well, thank you so much. Oh, go on.
I would like to add something to that, John, question, if allowed.
Of course you can.
Very quickly. I actually am going to give you a little bit of different view. I actually think those four currencies are going to be very strong in the future, even if Chinese have the control of the currency in a way, because it's not really floating and everything, and they can actually move it back up or down. What it has been proven is that China has been very resilient in this virus, and they are actually doing very well, not only in terms of the global growth of the GDP, but in terms of manufacturing and everything. And I don't think that's going to decrease. That's going to just continue. So I would have some money in yuans, and I will have, of course, a basket of currencies, if you want to call it. Of course, euros, USD, GBP, and yuans. That will be my 4 currencies to have.
Thank you, Sebastian.
Great. Thank you, John. Excellent question. You've got lots of different feedback there. I'm going to now switch the topic a little bit. We're going into cryptocurrency. So this is coming your way first, Seb. So what's the general opinion on cryptocurrency from a long-term investment perspective? And how do you predict it to compare against something like gold?
All right. Predictions is what always people ask. It's very hard to do that. But I remember at the beginning of the year, crypto have a huge down. It went down to $3,000. And I think I said to many of my colleagues, this is the time to buy, going now, because I knew that the technology behind it is actually what is valuable. So a lot of people are comparing Bitcoin to gold because Bitcoin is not very efficient when you're trying to do transactions. Actually, you can only do like 7 transactions per second, compared to Visa or MasterCard system that can do like 40,000 per second. So it's not very efficient system. It's like trying to buy a house or multiple houses with a gold nugget. It's not possible. So that's why I think it's gonna be more about something to put the value like gold. It's going to behave a little bit like gold, but digitally. What I recommended in one of the webinars that we had is actually Ethereum. I think it has more applicability in the real world. And I think it's going to be actually one of the big players later on. Would you put all your money into crypto? I would say no, don't do that. There is a very high volatile currency at the moment. It can go up, it can go down. It has been stabilizing for a while, but definitely have some exposure, that's for sure, but not all your money or your retirement savings or anything like that. Of course not, but have some exposure for sure.
Excellent. Any contrarian views there about not having exposure to crypto? I must speak personally, I don't really have much invested in crypto, even though Sebastian does try to persuade me otherwise. But you know, it seems like it's a very volatile investment, but done very well recently. Anyone? What do you do, Howard? I know you've got a little bit of your assets in crypto.
So this is the way I look at it in my very simplistic way. To me, it's like going to Macau in the casino. I've put down a few €100. We have an app, a crypto app, and I did it through that because I'm not really comfortable with exchanges. It uses an exchange. And in 10 years' time, I'm going to have a look. And I will either have nothing or I'll be a multiple millionaire. And the only reason I've done it is because I don't want to be the plonker who didn't do it. In other words, people in 10 years' time are going, why did you not buy when you're a financial advisor? So I've operated on that basis, but it's a very ignorant basis in many respects. I bought a bit of Ethereum because I believe in the underlying technology, I think, as Seb was saying, and a bit of Bitcoin. But there are people who can day trade crypto because of the movement. And so it really depends on where you are and how strong your nerve is. You know, I'm in my latter years, so I can't afford Macau too much. So I've just put a few £100 into our app as it happens, but you can do it in other ways as well. But I definitely think some exposure, but accept the fact it may all go to zero.
Yeah, I think that's fair enough. So we've got a question more about the markets. So Gerardo has asked in our WeChat group, and if you're not in that group, by the way, please let us know. We can add you into that WeChat group. Lots of chat in there today. So Gerardo has asked, there are some expectations / rumors that during Q1 or Q2 2021, the market will not recover and things will get worse for many companies that are already struggling with sales, cash, investment in 2020, etc. According to some suggestions, it's a good opportunity for investment at the beginning of 2021. Can you recommend some sectors to support and get a better return on investment for a medium to long-term plan? Phil, you're nodding, so I'm coming your way.
Well, I would only echo in terms of sectors what I said earlier to Sarah's question. So with a mind on time, I don't necessarily want to repeat that, but I think the other element of the question is, do I subscribe to doom and gloom, the doom and gloom merchants that indicate maybe there's going to be a decline in the global economic environment, potentially in Q1 of the following year. It's a very broad question and difficult to answer very, very quickly. One thing I would say is I think most, if not all, of the bad news or the potential bad news is priced in. And we can see that markets that focus on the tech or indexes that many of the tech funds are in, for instance, the NASDAQ, have equaled and continue to sort of gain new ground in terms of, record-breaking high levels or watermark levels, if you like, whereas other areas are, remaining in the doldrums. And, to name an index there would be the FTSE 100. We've got, big global companies listed in London, very much suppressed and in sort of areas where, they have suffered, and I expect them to continue to suffer. And for example, oil would be one there. And, so do I think everything's going to go to doom and gloom in January? Yes, there's stimulus packages, and in the UK, for example, that's been extended to spring, March. What is the fallout of this if when those stimulus ends? I think this is the question. For example, a cinema chain right now will be closed with several hundred or even several thousand furloughed employees. What happens if this thing doesn't end, and if that cinema chain closes down and those people are put onto the unemployment market and generate statistics and a wider sort of slowdown in economic activity and spending, and myriad of knock-on effects. So let's hope that the governments have our back with this, and that stimulus packages will be extended to as long as they are required, and that they are doing the right thing to avoid any sort of major downturn in the economy. And my sort of caveat is, no, I'm not buying airline stocks. No, I'm not buying hotel or leisure stocks. These sort of areas will continue to be depressed. And I'll invite some of the other panelists perhaps to contribute, or will.
What I'll do then, just to direct it a little bit, because I think it's right. It's good to I think the better part of the question is perhaps what should an investor doing? I think Gerardo was getting at that. If you are sat there looking for investment opportunities with a lot of what's going on at the moment, is it a wait till Q1, Q2 2021 to wait for a buying opportunity, or what should an investor be doing now with COVID around, with US election just happened and the outcome of that, vaccine news this week, Brexit in Europe? What should an investor be doing at the moment? Perhaps I'll jump to you, Seb.
Well, what I'm recommending right now is I don't see the oil as a future powering of the world. I see more on renewables. So I will suggest, look, it doesn't matter if Q1, Q2, or even Q3 or even Q4 of next year goes sideways, because if we're planning to see the big picture in 20 years or 15 years, and bear in mind that most of my clients are between 30 to 45, 50. So if you're in that range and you're looking for a prospect time zone of 20 years, renewables will be my sector to go in. I will not even worry too much about going down or up. I would just go into that sector because I know there's going to be a lot of influx of money going into that direction. What I see, maybe oil will jump a little bit because emerging markets will need more oil, but it would eventually all come to renewables because it's not sustainable to have oil. That's my view of things for the later on, I will say.
Okay, great. Before I jump to you, Howard, and I will come back to you to wrap it up. Eddie wants to talk, and I want to get someone else on before we end. So, Eddie, I hope you're ready with your mic up. Can you hear us okay, Eddie?
Hello. Good evening. Thank you very much. Yes, I posted the question. Should I read it out loud?
Yeah, please do. Yeah, ask away.
Okay. So, well, on paper, it looks like China is opening up. They want foreign investment. Of course, they want Hong Kong and Shanghai and Shenzhen be as attractive as New York Stock Exchange, NASDAQ, etc. But the problem is the volatility and, of course, the accounting systems. They have their own laws. So my question is, do you think China is really opening up? Or I see actually the opposite. The China is closing down, especially when it comes to laws, etc. Even before COVID. What do you think on that? Closing up or opening up or closing up?
Who wants to take that one on? Opening up or closing up?
Oh, I think it's doing both.
But, yeah, that's it. Mm-hmm.
I think
I
it's
agree.
doing what we were very good at doing, us British people, which is known as building an empire. And so on one hand, the velvet glove or whatever you want to call it, the power, contained in this soft exterior of investing into parts of the world like Africa, etc. And on the other hand, welcoming in certain sectors of expats where China needs that help. But increasingly for areas where it's felt that the Chinese nationals can do as good a job, then expats are being removed or put onto localized contracts. And that's a trend that's been going on for some time. So I think there's several things going on. The demographics of expats are changing. There's more younger people. There's less of the megaliths, the giants of the expat world, perhaps. And there's both opening and closing. So it's like everything in China, probably. It's a bit yin and yang, in my view. And it depends which lens you look through. But for me, if you're looking at investing, there are definitely ways now that China's opened up. So through the Hong Kong Stock Exchange, one can buy some very interesting Chinese companies. Phil, probably more expert than I am in that area, I don't know. But, I've got clients who are looking at Sinopharm and Nongfu Water and all these Neo and various things. I'm not a stock picker, so I always go for a global view and try and zoom people out from the local news and what's going on at the time. But I do think
maybe
there's dual movement.
Sorry. Maybe it is some kind of a quality over quantity strategy. The CCP doesn't want those, let's say, hippies coming to China, just travel around. They want quality. They want the best of the best. And you see this categorizations of foreigners. They want people with capital. Maybe they just want our money. Of course,
Well,
they don't really want.
I think they're like any other country, that they want to have good quality people come in who can help them to grow their economy, grow their expertise, grow their skill base in different ways. And, sadly, perhaps if we don't have the skills that China wants, it's going to be hard for us to enter. But, that's the same with much of the world, I believe.
Yeah, it's not a country you can become a citizen of. I see all the time there are a lot of experts coming. They're staying for 1 year, 2 years, and in this time, the company tries to learn as much as it can from the expert, and then they just push him away. Okay, just a little bit like using. But yeah, that's that's normal. I think that's. What do you think on that?
But Eddie, if I may interrupt, since I see a lot of SMEs, there's a lot of concerns within among the owners of those companies and intellectual property. So you might think that yeah, you bring an expert and the Chinese will learn, but in reality, the experts still very much need, especially when it becomes to very specialized things. So what I see most is that China is morphing from being the manufacturer of the world to a more specialized kind of country. I mean, if you think about history, so just check about, like, for example, Taiwan 30 years ago was the factory of the world, and now they are the semiconductor factory of the world. So maybe something similar they want to get. So they will probably leave India to do the manufacturing of the low-end things because it's going to become cheaper there. And maybe China will become specialists in, I don't know, let's say quantum computers or something like that. I don't know. Something that they are developing right now, or AI, for example, which they're very heavily invested on.
Yeah, I'm also talking about the intellectual theft. I'm in Germany here, and I know German companies, they became fortresses here because they're so afraid of intellectual theft. It's unbelievable, especially in the engineering sector, and that's a big issue. If somebody goes to China, somebody who worked maybe for Google, for Facebook, or for some SAP, some big company, and they want, of course, the knowledge, the know-how.
It's really hard. It's not that, especially with specialized things, it's not that easy to just get the knowledge and you just replicate it. It's not that simple. But yeah, I mean, eventually they will learn how to do it, but it will take time. But it's like everything, I guess.
Also, I think we're in danger of a bit of cultural imperialism creeping in, because if you look at the way the British built their empire, they basically stole raw materials under the guise of Christianity, you could argue, from one point of view. You know, they were very clever at extracting raw materials to power the Industrial Revolution. Maybe it's just the case that China is powering an intellectual revolution. And, you know, it is the case that there's far more patents being produced in China than any other country. So actually, China is being extremely innovative in many areas. And I think, ironically, there could even be a tilt the other way, where Chinese are demanded in foreign countries to help out, and we see more Chinese expats going to Germany.
Sure, absolutely. I don't want to monopolize the Q&A section, but may I ask last question?
Very, very quickly, Eddie. We are short of time. Quick question. Go for it.
Okay, yeah. So I opened a Chinese brokerage account 2018. There was a new law, and for foreigners who lived in China, it was finally possible, and I was able to buy stocks in Shanghai and Shenzhen. The problem is with those stocks, they go up and down, up and down. Do you think? I heard that CCP is trying to make this Chinese stock markets also fit for buy and hold strategies. So do you think in the Chinese stock market it's going to be the same as in New York?
It will take some time to mature, that's for sure.
Yeah.
I mean, you've got to look at it and actually realize that obviously the regulators having a key impact in the market. I mean, you look at the financial last week, you know, they stopped that IPO, and that's huge. It was going to be the world record-breaking IPO, and the regulators come in and said no. Could it be political? Could it be for genuine reasons? We may never know, or we might not know for some time. So yeah, for sure, it's gonna take a lot of time. I know a lot of people that do invest in Chinese stocks, and you hear a lot of good stories, and then not much noise after that, because perhaps, as you said, they enjoyed that and told you all about it, and then it comes down in this, and yeah, the market tends to go very sideways. I mean, in reality, how much can they actually control in that kind of movement realistically? I don't think there's much they can do.
Yeah.
I also think
Thank
the
you very much.
whole economic structure of China can't be compared easily with the Western world, so that the way the stock market moves is not really so much to do with price earnings ratios of companies, although you could argue there's a bit of a decoupling going on in America as well because of quantitative easing. But I certainly think there's a more of an economic link between the valuations of companies and the stock market in the developed world than there currently is in the Chinese market. And it may have changed since I last looked at it, but my understanding was the Chinese stock market is largely the province of retirees who go in and have a little bit of a go at the stock market. And to me, that's a very, very different field. Although things are bound to change and develop, I don't think they're anytime soon looking likely, but I could be wrong.
Thank you very much.
Excellent. Thank you so much, Eddie. Two great questions.
Thank
Brilliant. Well, that's all we've got time for now, everybody. And there has been other questions that have come in. Hopefully we'll be able to throw that into the WeChat group. But what I want to give everyone the opportunity to do now is actually, if you would like to have your own personal one-to-one Ask Me Anything session, speaking to an advisor about your situation, because a lot of it is very big questions here. But if you'd like to have a one-to-one asking questions about your situation, they can ask you a few as well. So just on this little poll here, would you like to set up an individual Ask Me Anything? If you're interested, say yes, I'm interested. If you're interested, but perhaps now is not a great time, but I'm interested, but not now, or no thanks. And we can get back to you if you are interested. And with that, I'd like to say, Howard, thank you so much.
Thank you.
Thank you, Seb.
Oh,
And thank you, Phil, for your time as well. Excellent, great session. And I look forward to getting a lot of feedback from this. And if you like these kind of sessions, we'd love to do more of them, getting your questions answered. It's been a real great range of questions. We also have a WeChat webinar group. So if you're not in that group, reply to whoever invited you to that group and they'll put you in, or the email address that invited you, just reply to that and we'll make sure you're added into that group. This was our 26th webinar. We're doing them every 2 weeks and we look forward to seeing you next time. Thank you, everybody. Good night.